Hi, this is Michael Waits, and welcome to AIP's News Roundup with Theresa Blissing, the founder of AIP, and Rahul Mathur, an AIP ambassador and one of the most respected influencers in InsurTech globally. We are broadcasting, as always, from True Digital Park. How's everybody doing today?
Good, Michael. How are you? How are you,
Uh,
Rahul?
I'm doing good, guys. It's quite a warm morning in London, quite different from the normal ones. So, yeah, super excited to be on here.
Darn it,
2020 is coming up.
yeah, it is. I was just going to say, we should just get into it as always. There's a lot to discuss today, particularly as we wrap up 2019. I just feel like in a year filled with big things in the InsurTech space, let's talk about some of the biggest things, yeah? Where do you guys want to start?
I
Well,
think, Michael, alternative distribution, grab your favorite company.
I hate both of you, by the way. I'm just kidding.
So, what,
no,
what
but
I've really what I've really loved about Grab this year is just the progression it's made. So at the start of the year, I believe it was January, February, we had the announcement with Zhong An where they were going to support Grab's digital insurance marketplace. We then
Right,
saw Zhong An deciding to support Ping An, Good Doctor, and Grab to launch Grab Health.
right.
And towards the end of the tail end of this year, around August and September, we saw it launched out in Singapore and then Indonesia. So quite an interesting play, but I don't know what you guys have in mind on this.
Go ahead, Dries. What
no,
do you
no,
think?
exactly. I think Grab is the company that created the most buzz this year. I've seen Tom Duncan from Grab, who's heading their insurance vertical, at least at 3 conferences speaking, and the audience was always packed for his talks. And I think it is really interesting what Grab has done this year, starting with the JV with Zhong An at the beginning, and then the launch of their first micro insurance product,
I was going to
which I
say,
think is very interesting. Because they made insurance in bite sizes, where it's affordable for the drivers, that they can have a part of their fees they are getting for one drive they are executing turned into a critical illness solution. And I think that is great, right? Because that makes it affordable for the drivers, and also is a point of awareness, right? Because they are that's their income, like driving is their income, and they understand, okay, if I cannot drive because I'm getting cancer or a stroke, etc., then I will be covered. And I think that's great. So really looking forward to next year, if Grab is actually rolling this out also for regular users, not only for their drivers.
yeah, I also think that as they expand, not just to their drivers, as you mentioned, but as they expand out to the entire sort of sharing economy, there's a gigantic audience of people that should be able to use this micro insurance product, particularly for, like you said, the income protection, this critical illness thing, right? If I'm a Grab driver, but also if I'm a pizza maker, anything, and I can insure that via micro insurance, it would be super cool to protect my income, particularly as you always say, Teresa, for the more lower income people, where every week to week their salary or month to month their salary is so important. Being able to do that, I think, is transformational. And
And I
further to
mean,
that, I just want to say one more thing. Sorry. In Grab's case, the more I talk to people like surrounding the ecosystem in InsurTech, and you and I were at that OIC event yesterday, the more I talk to people there, the more they think that they're stepping gently, not just into InsurTech, but into the entire fintech space, and that InsurTech is their first sort of launch into this. And they think that that product, along with some of the other products, can offer. And again, we can all laugh about the alternative distribution, but they have this massive potential to completely disintermediate what's happening in all of the sort of financial product related technology enhanced products, which I think is going to become super important as we move into 2020 and beyond. I interrupted you. Go ahead.
no, I just wanted to add, it also pays tribute to the new reality, like the gig economy, where
Yep.
you have a lot of these micro entrepreneurs who are the drivers, or also when you look at the Gojek ecosystem, where you have the cleaning lady, etc. And we also talked to Gigacover, right, this year, who's also focused on the gig economy, and I think that is definitely a trend we are seeing in the workforce. And naturally, the insurance industry has to design products around ensuring these micro entrepreneurs.
Yeah, and if I just want to go back to one of the things that you and I talked about in the middle of this year, just sort of after we started the InsurTech podcast, I believe it was with one of the insurance companies in particular that we talked to in Thailand, without naming them, is that insurance itself is not just becoming something that disintermediates risk. It's also becoming, in a way, an appendage to the healthcare industry at scale. In other words, they're moving from just insuring things to helping people become more healthy, which is different than the model they had. And Grab is also trying to participate in that space too. And I think maybe I can get your comments on that as well.
Rahul, any comments on that?
I think Grab's play here is quite clear, right, Michael? If you have 150 million people on your platform,
Yep.
they have probably the lowest CAC for any financial services insurance product from here on, and they're using their drivers as the early adopters to collect feedback, right? Because you have a customer base of about what 150
Right.
million people and 3 million drivers, so it adds up perfectly as your early adopters and then mainstream audience. And it's also their drivers are more bought into trying things from Grab because, well, let's face it, right? If your employer gives you something, even if you don't necessarily like it, you'll still try it.
Right.
And that's exactly what Grab's play here is, right? They're using their drivers to learn, collect feedback, and then roll out. And I think
Yeah.
Grab may actually do a lot more in fintech in the coming year, right? Because we've seen
We
the
know it.
news
Yeah.
that they've spun out Grab Financial Services. It was rumored to have applied for a Singapore digital banking license. And
Yeah.
everyone knows bank assurance is one of the most interesting channels because it brings together savings protection and I guess other financial products.
Yes, and let's not forget their joint venture with Ping An Good Doctor, right? Where they are offering O2O health solutions. They launched the first one in Indonesia, being there in direct competition with Gojek and HelloDoc. And in general, I mean, Ping An is also one of these, big players in 2019 that, created a lot of InsurTech movements, not only in China, but globally. And Rahul, you have analyzed the whole Ping An strategy. You want to fill us in on this?
Yeah, yes, I guess Michael Theresa's number two on this on our year's list for the big guns is definitely Ping An Group. What I found so fascinating when I read their Q3 financials is they acquired 30 million new customers in the third quarter of this calendar year. That's
30
a big
million.
number.
Yeah.
And what impressed me even more is 40% of that 30 million, so roughly 12 million customers, actually came through their broader five ecosystem strategies where they're trying to develop standalone digital ecosystems to get customers in. A nice example of this is their auto home platform, which they acquired a couple of years ago. They've got like a 50% stake in it. Auto home has about 40 million daily active users, and that's quite an impressive figure. And it's probably netting them like 100 million a quarter in profit. What I found very interesting about Ping An is they made two big strategic moves, actually three strategic moves this year. The
Right.
first is they've nailed their overseas execution. So they took an equity stake in a German aggregator called Joonko. Their fintech arm is now officially in the EU with one of their portfolio companies, FinLeap. So they're in the EU. They're also in Hong Kong with the One Connect Bank. One
Mm.
Connect IPO'd, and just fresh off the press about last week is Ping An is now officially in India because their Voyager Fund took a big equity stake in the car distribution platform Car Deco, and it reminds me a lot of auto homes. So hopefully next year we'll get Car Deco and Insurance Deco on this show to tell you about what Ping An's strategy is in India.
Yeah. I mean, one of the things we learned from talking to Jonathan Larson was not just the stuff happening in the Global Voyager Fund, but I mean, every 3 minutes in the conversation we had, he was talking about big numbers, just really big numbers, right? I mean, and I think it's significant the way they incorporate what they do in their investment arm, right? And I made the mistake on the conversation with him. I said, when you acquired company X, and he said, let's be careful. We didn't acquire it. We invested in it. But I think the other thing interesting to point out about Ping An that I learned was they don't only create new subsidiaries. In the 31 years that they've been around, they've created 32 separate companies. Right? That's how they do their thing. And that's actually really interesting as well. Again, getting back to this idea of big numbers, that's a lot of companies to have one company be associated with, 32. And that's their methodology. We should talk a little bit about why they do that strategically, right? Because this is a model potentially for other companies, not just in the insurance industry. They do this because they want to do, in a way, like a proof of concept. Here's a business that we think works. But then if we can get it funded internally, so we maintain a majority or a slight below majority ownership, but if we can get it funded externally, not only can we help the business by using the network effects of our investors, we can raise the valuation of that company because the value of it inside of Ping An as a wholly owned subsidiary is going to be potentially factors less than it would be if it's outside the company, and we let the market value it at whatever its market value was, or the sort of fear of missing out value of, wow, I wish I'd built that myself, but here's some money at a much higher valuation. I think it's important to point that out, that Ping An itself is not just, a typical insurance company, but that their investment theses and the way they carry them out are different. Yeah.
Yeah, exactly. What else happened this year? A company I didn't really had on my radar at the beginning of the year was Axinan, but they haven't really surprised me with all the new announcements and developments. I mean, in February they have launched their mobile protection insurance platform Igloo. Right? So this is like the first time I think that Axinan was, getting more into like the limelight. Before they were operating mostly behind the scenes, offering insurance for the e-commerce players like Lazada and Bukalapak. But this year they have really come out and first with Igloo and then definitely with the reinsurance license they acquired in Labuan, Malaysia, where they now have a general as well as a reinsurance license. And we talked to Wei Ju, right? I saw him in Singapore. We also recorded with him on a panel, and I asked him, I was like, what is the strategy behind the reinsurance license? Is it, do you want to be a competition to the other insurers? And he told me, no, it's just, our technology is so advanced, the way we underwrite the policies for the smartphones, for example, right? They have the ability to not only insure new smartphones, but also smartphones that are already like 2 or 3 years old. And the way they do it is that the customer takes a selfie, and from the selfie, they can actually tell if there's a crack in the screen. And when he goes to insurers and, tells them this is a new way of underwriting, I guess there's the problem that they don't trust the data, they don't trust the technology, and now with this reinsurance license, they have some skin in the game, right? So they can take some of the risk, and therefore it makes it for them a bit easier to approach insurers and partner with them in offering these like new insurance licenses and new insurance products. And they have heavily expanded in Southeast Asia. They have been in the Philippines. They're working in Thailand. In Indonesia, they have been already with Bukalapak. So yeah, very, very interesting one. Rahul, you also wrote a piece about them. What is your viewpoint on Axinan?
Yeah, Rahul, before we do that, I just want to make a distinction, and I want to explain why Axinan is not in the same size league. Remember, we talked about big numbers, right? It's Ping An, right? Or it's Grab. And yet there they are on the list of companies that we think are the most significant this year. And I think I just want to make the distinction that like, you don't have to be the biggest company in the world, and you also don't have to be 30-something years old to do things that are really significant. I just want to make that point. And that's why I think we talked about this offline, but we should mention it online as well. I was personally very impressed with this as a team of people that are trying to accomplish something that's different than what a lot of the other sort of InsurTech startups are trying to accomplish. And that's why they're on this list, because they are markedly different, even at their size, than a lot of the rest of the ecosystem. All right, go ahead.
I'm completely with you guys on being bullish about them. I met them in June this year when I was at their office in Singapore. You guys met them, I believe, in October. And we both independently came to conclusions that they're doing really well. I was very, very impressed. The one reason why I would keep them on that list, Michael, in spite of size, is now not only because of the fact that they've delivered in their logistic insurance and their Igloo platform from a tech perspective, but
Right.
pure promise, because once you have an FSA Labuan reinsurance license,
Right.
you can passport all over Southeast Asia, provided you get a fronting carrier in the region. And in fact, the fronting carrier can cede 100% of the risk out to the entity in FSA Labuan, and they can decide how to cede the risk. But the beauty is that once Axenan has that skin in the game, they can go so much faster from geography to geography, because to some extent their Igloo platform is a pick and drop across different geographies. There's not too much of a difference. But like you said, the problem they will face is most insurers on the underwriting side will not be comfortable looking at 50 to 60 different data points, because they're used to a rules-based rating engine, and Axenan does something maybe a bit fancier than that. So this is a great opportunity for them to really accelerate that product launch cycle.
Right. Absolutely. She said, do you have any other commentary on Axenon? Because I want to make another distinction as well if we're going to move on to the next topic.
Go ahead, Michael.
Awesome. So Akko Insurance is a company that's based in India, and we spent a lot of time talking to this team as well. And if I remember correctly, Akko is an outgrowth, and I said this to somebody yesterday, of CoverFox. Did I get this right? Where,
yes,
yeah,
so Theresa had mentioned about Axenon. Are they worried that they're going to compete with some of their potential insurance partners, their underwriting partners? And it's a maybe, right? But Akko made the decision that instead of just being a distribution methodology and a new way to get digitally connected to potential clients in an environment where penetration is still very low, they said to really have impact, CoverFox is great, we get it, but we want to go beyond CoverFox and we want to be a full stack digital insurer. And they went out and built this. So again, another distinction. I guess for me, the reason why they're on this list is because the underwriting part of the business is where all the risk sits. Everybody knows this, right? That's by definition. But they've made the decision, and it's hard to argue at some level, that to compete at scale and to build a sustainable business over time, they want to be in the underwriting business as well, which will get us into our next company, Sing Life, but we can talk about that afterwards. But I'm curious how you two distinguish between a company like Akko Insurance and some of the other InsurTech startups as well.
Yeah, I think Akko's thesis there was quite clear, right? The founders have seen the world of being an insurance intermediary in India, and you can have as many great product ideas as you have, and Akko has demonstrated they have some fantastic ones. But unless you get paper to actually launch those policies, you're pretty much hand tied. So Akko has definitely provided the team Varun Dua and the rest of platform to sort of go out and really innovate on the product side. I mean, you look at some of the products they have on there.
But isn't that the question? Rahul, sorry, isn't that the question, right? It's like, if you're beholden to other underwriters, they can say no, even though we've talked about this before, right? Even though they said, yes, we'll underwrite whatever policy you want because we have this agreement in place. If you get maybe too innovative, maybe they'll say, I don't want to take that risk. But if you're managing your own balance sheet, and we can get again to this with Sing Life, which can actually be acquired, which is something you talk about a lot. If you can acquire your own, if you can manage your own balance sheet, then every product you can innovate, now you're innovating for yourself, applying no risk to anybody else. And if it doesn't work, you're the only one that loses, fair enough. And if it does work, then maybe you can do this omnichannel multi-distribution system and let them underwrite as well to share some of the risk. Sorry, go ahead.
I think that's absolutely spot on, right? Being full stack, in my opinion, is something you should definitely aim to do at some point in your cycle as an insurtech startup. The only caveat I would put there is everyone knows you want to start off as lean as possible, according to Eric Ries's book on lean startups. So sometimes being that MGA or broker for the first couple of months is actually a lot more capital efficient. In fact, Akko actually began life as a broker for about 7 odd months until it was able to get its license. But yeah, I think on that note, Akko has also raised 46 million at the tail end of this year. from a very interesting bunch of investors, including Mr. Binny
Right.
Bansal from Flipkart. So they're doing quite well. And I think 2020 will be a year where they sort of have an opportunity to correct their combined ratio. It's been fairly high for a couple of months, but it's also because they're launching products which no one has launched before, so they need to learn how to price it.
Yeah, I think it's
Yeah.
not only to
What
learn
is the
how to
combined
price
ratio?
it.
120. Sorry. Go ahead. Go.
No, you'll be amazed. The combined ratio in some months actually ticks up above 170.
Wow.
Oh,
Okay.
wow.
Wow. Teresa, sorry.
But
Go ahead. I
hasn't it
interrupted
also
you.
to do with size in this case? I mean, Acco is a fairly young company, and as long as an insurance company hasn't reached that like critical mass, it's really, really difficult to have this combined ratio under control. So I'm quite hopeful for them that they will get this under control the more users and customers they are getting. Another company we didn't really cover this year, but I definitely want to get them on the show for 2020 is Digit, the other insurer coming out of India. And they also just raised 100 million. With a valuation now of close to 900 million USD. So that's also definitely a company we should get on the show. Raul, any comments on them?
So Digit's a slightly different play from Acco, right? Because they've taken the VFox model where they're trying to enable brokers as well. So a significant portion of Digit's business actually comes from offline channels, which has led some people within India and outside to question whether they are an insurtech or not. But I think full credit to them for a team that's come up in 2016. They have like 2.5% of the third-party motor liability market share. And that's impressive, right? Because motor is the biggest line of business in India. And the reason why, Theresa, I think that 100 million raise is so interesting is so far they've only been raising money from Fairfax Financial Group. So they were almost like a subsidiary of Fairfax Financial Group. And this is the first time they're going out there and collecting external capital.
Right.
Yeah, and just for the fact that they work with agents and have more of like a VFox strategy, I would still consider them an insurtech because, in my opinion, insurtech and or digital insurer doesn't necessarily mean that you're not working with agents anymore.
Yes.
I firmly believe in insurance we will always have agents. Like people will want to talk to an agent at some point, right? And you just have to give the customers choice, right? And having agents and being a digital insurer, can go together as long as you integrate the agents in the ecosystem and connect them, throughout the customer journey. And then I don't see any point why they cannot be considered as an insurtech. And you just mentioned VFox. They are now the first European unicorn. Just announced this month, and they also had a very similar strategy. Have the agents within VFox, and then starting the digital insurer, which is still working with the agents, but full stack digital processes.
Yeah, so one of the interesting things about this, Theresa and I had a conversation again about this yesterday, is that, and Rahul, tell me if I'm wrong here, both of you tell me, but in Thailand, you have to be associated with a particular insurance company, be registered, and then be licensed through that insurance company to be able to sell insurance, right? But when I was talking to, I think it was Harshat yesterday at the conference, he was mentioning to me that in India, anyone can sit on these distribution platforms and sell insurance without being licensed per se. They have to be sort of certified. They maybe have to pass a test or have 30 hours of education. But it changes the whole thing. I agree with Theresa completely. I think the human interaction between you and me for insurance selling is never go away. It's not possible. Right? Because at the end of the day, you need to be able to go like this, and you can't do this to a machine. You need to be able to say, Rahul, is this really okay? Like, can I really do this? And if I trust you, which if you're my friend or my cousin, you say, yes, I'll do it. But it also means that if I have a mobile app and we're just sitting around talking, and you say to me, I'm going to buy a new car. I can just go, hey, you should buy it through here because I'll get a little bit of credit for it. And I know this is the right insurance. PPP, I press a bunch of buttons, you buy some insurance. And then you think, wait a second, can I make some extra money by like selling insurance to my friends that may not have it yet? I'm definitely going to do that.
Yeah.
And now you build this ridiculous network. It's not MLM, yeah? There's no sort of multi-level marketing angle here.
Yeah.
Although maybe that will come. But the cool idea is that now anybody can be an insurance agent, which should drive penetration, because trust is one of the biggest problems, at least what I've been told. So I don't trust if that's true. But if your sister tells you she bought through this, you'll buy as well.
Well, I have a different opinion on that. I think having people who are just selling insurance, to make a commission and not being able to give good advice on financial products. I think that is one of the reasons that the insurance industry has such a negative image. So I would be careful with that. But that's probably the discussion for another panel in 2020. Should we move on to another mover and shaker this year, Sing Life?
Oh my! This was probably one of the highlight interviews of the year, Michael, wasn't it? I think you were a little mind blown, and so was I after the conversation. I'm sure it's the same for Theresa, but Walter is one of those seasoned insurance executives who I think has finally realized he wants to try something quite different. I guess Sing Life bought out Zurich's life insurance book in Singapore to start out their business, to just build up some early critical mass to not get hit by shocks and by risk capital requirements.
Right.
But I think what really stands out about him is that whole Sing Life account approach of combining your savings, growth, and protection, and just the thought process behind how he took a traditional unit-linked insurance policy and he's come up with this great product is really fascinating.
Yeah, and I loved his like speaking mannerisms with me. So I said something to him like, yeah, so you bought this book of Zurich Life, and he just like stopped me in the middle and said, yeah, but we didn't do that to get the license. We already had a license. He said, I want to be very clear about this. We didn't buy their license. We had our own license. We bought their book of business, right? And what was the other thing he said to me? I said, so would you consider getting a virtual banking license? And just before I even finished, you heard it. He said, we're not a bank. We don't want to be a bank. Banks fundamentally are loan makers. We don't make loans. We want to give returns and have a higher investment value for our customers. And I just thought his attitude was, wow, this guy is definitely going to be huge, right? Really going to be huge. And yeah, my mind was kind of blown. And like I've done 300 episodes in the last few years talking to startup founders and stuff like that. He's definitely in the top 5. Definitely. What do you think, Theresa? Significant about Sing Life?
No, I mean, certainly an interesting company, right? And also where, we have like the lines blurred between InsurTech and FinTech. And, very interesting what they are now doing in partnership with Visa.
Right.
And I saw them at Singapore FinTech Festival, and I think it's just like the very small things that make Sing Life different. At the beginning of this year, they launched this like QR code system where you can pay the premium. It's like a very, very small, technical proposition there, right? But it makes such a difference. So consumers can actually just scan the QR code, and then it will already have like the policy number and the amount, and people can just like easily pay it. It seems simple, but that really makes a difference, right? And if I consider all the hassles I have with my insurance, I would love to have something like that. And yeah, I think that is what makes Sing Life great, because it's like consistent throughout the customer journey, that they really try to make it as convenient and digital as possible.
So I want to further that point as well, right? So the Japanese have a saying, it's "Chiri ga tsumoreba yama ni naru." It means like if you pile enough dust together, it becomes a mountain. And they do all these little things that in combination become really important, right? The other thing is they rebranded. They changed their logo, right, from a red lion, which again, Walter said to me during the conversation, the red lion was because, red looks like power, lions are powerful, and every other insurance company had a red lion in their thing. They just figured that was the way to get credibility. But now that they're at scale, they don't care about that so much anymore. And now they want to have this thing that they call the Sing Life burst. And again, it seems like a small thing. But again, if you do a bunch of these little small things, you rebrand, you're now self-confident, so you don't have to exude confidence. People already trust your brand. They've done that. Now we want to give you a burst, a financial burst. And that part of the conversation was actually real interesting too. And like you said, Theresa, it doesn't sound that significant, but it's that subtle undertone of confidence that a company has that makes its consumers, its customers feel so much better. That was just part of it as well.
Yeah, no, for sure. And I think, 2019 has been a great year, and I really, really enjoyed, working with you guys. And that's why Wayne is bringing over to Michael now a little gift for Christmas. Michael, open it.
Oh my God, I didn't realize this was a gift for me. I thought Wayne was just bringing over Santa Claus. This is unbelievable. I'm afraid. Oh my God, I'm
yours
afraid.
has to come by post.
God.
I cannot send Wayne to all the way to London.
Oh my God. Theresa, you did it. Oh my God.
That looks incredible.
Oh, you should not have. I don't know what to say.
Aw, no, you're welcome. I really enjoy working with you guys. And Rahul, you will get your t-shirt as well. And just for context, we are about to redo the website, and also are working on a new branding that more represents what we are doing here, like all these thought leadership content we have produced during 2019, and really looking forward to 2020 and want to do more cool things. And so everyone stay tuned. New website, new branding, new content coming up in 2020. And thank you guys so much. I really enjoy working with you and talking every month about like the hottest insurtech trends across Asia.
You two are the rock stars. Let's make that very clear. You two are the rock stars. Merry Christmas to both of you guys as well.
Merry Christmas, everyone. Have a good one.
Thank you.
Thanks.